ICOs have exploded cryptocurrency market growth, and in this chapter you will learn how to take full advantage of these opportunities. Chapter 6 introduces you to ICOs, their history and how they differ from other funding methods. We cover the ever-changing laws and regulations specific to ICOs, as well as different types to look out for. We simplify the process of selecting the best ICOs and then break down what you need to know to participate in an ICO. An initial coin offering, or ICO, is a type of crowdfunding or crowd investing tool using cryptocurrency. Most are done completely on top of the Ethereum blockchain. By using a smart contract, Ether or Bitcoin is collected and is exchanged for the new type of token. This process takes place entirely peer-to-peer without any exchanges or brokers. It is commonly used as a source of capital for startup companies and to fund the development of new cryptocurrencies. Companies can pre-sell units of their new cryptocurrency or tokens in exchange for already established cryptocurrencies like Bitcoin or Ether. The campaign process usually starts off with the presentation of a white paper. This white paper provides all the key information like business model details, the technical specifications of the project timeline, the target budget, where they detail how the future funds will be used, and finally distribution. And distribution is a key area to look at in your research because this tells you about the available token supply and how many coins the team intends to keep for themselves. Initial coin offerings are still a new concept. However, on August the 7th, 2017, CNBC reported that initial coin offerings had raised $1.2 billion and now surpass early-stage venture capital funding for internet companies. This is an impressive achievement, considering the first ICO was for Ripple in early 2013. And in late 2013, Mastercoin ran their own ICO campaign. The Ethereum project broke all crowdfunding records in 2014 within 4 weeks. The Ethereum blockchain has come to play a very important role in the increasing popularity of ICOs, as its platform has simplified the process of issuing tokens. This technology can be directly related to the record-breaking ICOs that have occurred in 2016 and 2017. The most notable was a project called the DAO, which was able to raise $150 million. ICOs share common traits with both crowdfunding and IPOs, to which they are often compared. But to some extent, they are more of a hybrid of the two. ICOs and IPOs, or initial public offerings, both offer their investors potential future profit, but also potential risk and failure. An IPO will sell a stake in the company so that investors have a portion of ownership. Most ICOs to date haven't sold tokens that act as a stake in their platforms. The only exception to this was in 2016, when the DAO campaign offered tokens that were attached to voting rights. Also, an ICO is supported by people who want to invest early in a product or service that hasn't been launched yet. This makes them different from IPOs and more like crowdfunding campaigns. Then again, crowdfunding is usually based on donations, while investors in an ICO hope to gain a return on their investment. Therefore, ICOs are really a mix between donation and investment. ICOs are still largely unregulated, and this is a dangerous situation for investors who lack knowledge and experience. Circumstances are changing rapidly because of the extreme success of ICOs like the DAO, bringing ICOs and the cryptocurrency market in general to people's attention. There are some geographic areas where they are regulated in a similar way to share and securities sales, although enforcement is still a challenge. Standards, regulations and laws should help to protect both investors and entrepreneurs. However, there is likely to be a downside to this. For example, the cost and effort required to meet compliance could reduce the advantages an ICO has over regular funding options. Due to the lack of regulations mentioned earlier, developers and startup companies can run ICOs in pretty much any way that they choose. And this has led to a variety of different approaches on how campaigns are run, and does make it very difficult to cover all these situations. Some common types of pricing have begun to rise above the rest, which I will review now. Firstly, an increasing price. The ICO is set up to run in stages, and the exchange rate for tokens is increased over time. Early investors who took the biggest risk get the best price per coin ratio. There may be a decreasing price. The Gnosis team introduced the Dutch auction method, where the sale starts at the highest price per token and is lowered until there are enough bids to sell all tokens. All the tokens are then sold at that price. In a fixed price scenario, all tokens are sold at the same fixed price. Investors find this an appealing method because large investments will not generally influence the price. After the offering ends, it is not unusual for there to be a period where the investors are not allowed to transfer their coins. After this cooling off period, exchanges can list the token and have other people trade it at market price. And lastly, a situation where the price is not determined. This happens when the development team or startup company decide not to sell at a fixed price. Instead, they collect whatever amount investors choose and then distribute new tokens in proportion to the amount given by each investor. Instead of a traditional business plan or formal prospectus, ICOs use technical white papers. A well-written ICO white paper will give you a lot of the information you need to know before investing. They should cover how the platform will work, the potential uses, the ICO pricing structure, the development plans using the ICO proceeds, and so on. Whether it has a landing page or a full website, every ICO will have some sort of official online presence. And don't be fooled by the flashy layout and persuasive marketing language. These mean very little to your research. If a coin or ICO website or landing page easily provides you with information which answers your questions in a straightforward way, then that's a good start. They should provide access to their white paper and may have other useful links to supporting information. If you leave feeling confused or that you have not learned very much, then beware. The cryptocurrency market and ICOs are becoming a very popular everyday topic. You should be able to easily find information, people's opinions, expert reviews and so on a variety of different online channels. Reddit and other cryptocurrency forums are an excellent way to engage with fellow enthusiasts, especially if you are a new trader. You will find plenty of individuals who can answer questions that you might have, who are willing to share information that you might have missed. Try to see if the ICO that you are researching has their own social media channels, or if they show up in any other channels. The more active they are on social media, promoting and keeping the public aware of their developments, the better it is for investor confidence and research potential. ICO rating websites are a very good resource which allow you to compare different ICOs, read ICO news, make yourself aware of any alerts or issues, and find ICOs to participate in. Here are a few options to get you started. Coin Schedule is a little overwhelming when you first visit, but the site does provide solid analysis of current and upcoming ICOs. Smith & Crown is a curated list of ICOs and provides current market information on established cryptocurrencies. ICO List is a popular international ICO site that categorises its information by ICOs that are over, starting soon and ongoing. Token Market includes information about ICOs and about already established coins. And Sense Token shows countdowns for upcoming ICOs and a wealth of other information like white papers, videos, alerts that you should be aware of, and plenty of other useful resources. Here is a list of useful questions that you should use to help you gather information when conducting your market research. These questions are equally relevant whether you are deciding on which ICO to participate in or researching an already established coin. Does the coin have a clear objective? A coin needs to clearly state its purpose, since not all coins are meant to act like a traditional currency. Does it solve a real problem or have a strong use? The more common the problem, or the greater the impact of the problem that the coin solves, the greater the coin's value is likely to be. If the coin is the first of its kind and has a strong use, then it will certainly have a strong advantage over the competition. Is the information provided full of hype? When you do your research, can you get to the facts, or is it just jargon? If you only see marketing jargon, then you should probably stay away. And if you can only find a website or a landing page, I think you should certainly avoid this option. How does the white paper read? Is it well written and well structured? Does it stack up well against experts' opinions? Does it explain the technology in depth? The stronger the white paper, the more confidence potential investors will have, and the better the coin will perform in the market. Who is backing the project? If the project was and is still backed by prominent investors, then the coin will probably be more credible. What is the consensus mechanism of the coin? And this covers how changes to the decentralized systems are decided on. Common examples are proof of work or proof of stake. It is really important to know how the coin works. Is the coin centralized or decentralized? It is a basic but important requirement to know how the network is structured. Cryptocurrencies are meant to be decentralized in nature. However, centralized coins do have their own advantages. Is there a development plan? You can gauge the development team's commitment by whether or not there is a clear timeline for the development of the coin. How much money has the ICO raised and how much has been spent? Any financial information on spending habits will show you a great deal about the team behind the coin. How different is the coin from its nearest competitor? If the coins are all the same, then there is little incentive to try something new. How strong is the target market? Coins that appeal to a very small niche won't be strong in the market. The group needs to be large enough to support growth, but still well defined. And are there any legal barriers? This technology is new and always changing, and legal and government bodies are still trying to catch up. So you need to make sure that there are no regulatory issues with the coins that you choose. The ultimate success of a coin depends largely on the core founding team. This is important regardless of if you're looking at an ICO or a more established coin. Are they actively communicating? The more open the team behind a coin is, the more committed they are, and the larger their desire to succeed. Do they openly talk about their development progress and stick to their timelines? Or is everybody pretty much in the dark? How many coins will there ever be? Many coins do have a finite supply, and this gives the coin a stronger value. All coins with defined supplies will have that information posted somewhere. Usually you can find out how big the total supply is and how much has already been released. The higher the percentage of coins given to the team, the worse it looks. Also, if most of the coins are owned by a few people, this could be a bad indication as well, because those individuals could easily manipulate the market price. What is the market capitalization of the coin? This is easily found online on many exchange sites and is really a very good measure of the coin's value. Let's look now at the entire ICO process. In this section we will cover what needs to be done by the ICO team and you, from when the ICO is announced all the way to when you cash out. Announcements usually take place within cryptocurrency investment communities, such as Bitcoin Talk, Reddit and similar sites. The project team usually give a presentation, typically on the purpose of the ICO project, along with a white paper, other documentation, timelines, goals and any other information that a potential investor might need to help them to evaluate the opportunity. Then the team makes themselves available to receive any questions or comments that the community might have. After the announcement, adjustments based on the community's feedback are made to finalise the business model and the white paper. And this is a very important step as ICOs happen before a project is completed, making it crucial that the team is transparent and thorough with their documentation to really make sure that investors trust the ICO. An offer proposal is created which includes all the details and terms of the project, such as desired investment amount, project deadlines and so on. The financial instrument is always in the form of tokens, and at this point the start date of the ICO sale is announced and marketing kicks in to target small investors. Your first task to participate in an ICO is to buy cryptocurrencies that you will use to purchase the ICO tokens. Again, this is usually Ether or Bitcoin. ICOs don't accept fiat currency. The recommended way to purchase enough Bitcoins or Ether is through an online exchange. You will want to do this well before the start date of an ICO sale, as the registration process can take a few days. Once this is done, simply transfer money from your bank account to your cryptocurrency exchange account. For those who either don't have bank accounts or credit cards or would rather not use their IDs in this process, you can still buy Bitcoin or Ether from a crypto ATM, or you could try a peer-to-peer exchange and trade locally. Assuming you decide to use an exchange and not some other method of obtaining your cryptocurrency, the process is very simple. Using your registered account, you exchange your fiat currency, like US dollars or euros, for the cryptocurrency you want to buy, which only takes a few seconds. Exchanges typically provide you with an online wallet when you register, and this is where your new cryptocurrency will show up. However, don't keep a large amount of money in this wallet, as online exchanges are targets for hackers, and these hackers have been successful in the past. Instead, you need to transfer your new cryptocurrency money to a more secure wallet. Security is the main reason that you shouldn't keep most of your cryptocurrencies in an exchange wallet when you are trading normally. And participating in an ICO is another reason. Unless the exchange you used clearly stated that its wallet can participate in the ICO, you will need to use another wallet, or you won't be able to access your new ICO tokens. It is very difficult, if not impossible, to get your tokens from an unapproved exchange wallet, since many exchanges are overloaded with requests or won't allow it under their general terms of use. Most ICOs happen on the Ethereum network, so you will very likely need to acquire an Ethereum wallet. Sometimes an ICO will recommend a type of wallet because not every wallet is a suitable choice when participating in an ICO. One example of an ICO suitable wallet is My Ether wallet. This is a website that allows you to create, send and receive Ether, but you keep control of your private keys. You can generate a wallet and then protect it with your own passwords. You get a downloadable file with a public-private key pair. And to send Ether, all you need to do is upload the file and provide the password. The official start date of the ICO sale or launch date is when cryptocurrency tokens are made available. The preferred currency to purchase ICO tokens is usually Ether or Bitcoin. And the ICO company will provide a method to buy the tokens on the launch date, which was outlined in the offer. ICOs usually last at least a few weeks, but can be open-ended with no specified end date. The project will try to raise as much money as possible, but a good practice to look out for is when an ICO places a cap on the total amount raised. Once they have reached their target, the project can continue. If you haven't done this already, you need to make sure that you read the token purchase agreement and the general terms of the ICO that were covered earlier. You will have access to step-by-step instructions on how to participate from the ICO team, which will make things much easier for you. Other useful tips are: make sure that you convert the ICO start time to your time zone if the ICO starts by time. Watch the ICO news online just to make sure there aren't any issues that you've missed. And an ICO might start by block number, so check out the Ethereum Block Explorer to monitor that. When the token sale starts, you'll have to send the Ether payment to the address specified by the team. An ICO usually closes once the investment cap is reached. ICO tokens can be listed on cryptocurrency exchanges once the ICO is complete and the project is launched. Note that there might be a mandatory cooling off period right after tokens are released to investors. And during this cooling off period, you will not be able to trade. Once this period is over, you are free to trade them for other cryptocurrencies or back into a fiat currency. Once you have received your tokens in the wallet that you set up for the ICO, it is important that you transfer them to a more secure wallet. And you will need a bit of extra Ether in your wallet to pay for the usual wallet-to-wallet transaction costs. Then you are free to use these tokens to trade on cryptocurrency exchanges or convert them back into fiat money.